Okay, so I think let's formally get started now. And welcome everyone. And thank you for joining us for today's webinar hosted by Tiger Brokers Australia. As we stand on the brink of pivotal global shift with the US election just days away and China's economy undergoing transformative policy changes, understanding this dynamic is essential for investors everywhere. Today, we will explore how these global developments might impact markets across the US, China, and Australia, and identify key sectors and opportunities that could shape the investment landscape. We are honored to have with us Mr. Greg Boland, our Chief Market Strategist here at Tiger Brokers Australia. Greg brings decades of market expertise, specializing in macroeconomic trends and cross-market strategies. His insights have guided investors through both turbulent and booming markets, and his expertise today will be invaluable in helping us navigate the potential outcome and market reactions following the US elections and China's economic strategies. Without further ado, I will pass the microphone to Greg. Greg, over to you. Thank you.
Thanks, Jack. Thanks very much. As stated, my name's Greg Boland. I'm the Chief Strategy Officer of Tiger Brokers, and it's my pleasure to be here today to talk a little bit about the race for the White House and how it may affect markets. In terms of this presentation, we have a disclaimer at the bottom there and a disclaimer on the next page. The information that we provide may contain general advice and doesn't consider your individual objectives, financial situations or needs. And in terms of the major disclaimer, the graphics and charts are for illustrative purposes only. I have taken some from other websites, so the accuracy of those I believe is correct, but I'm not taking any liability if they are incorrect. Also, Tiger Brokers and its directors and employees may deal in these financial products that we're talking about, and we do mention some individual shares towards the end. We may deal in those ourselves as principal or as agents for clients, and we do earn brokerage and fees and salaries from these dealings. So be aware of that in terms of if you are actually going to look at trade any of these products. In terms of what I wanted to cover today, the key points really is the election is next week on Tuesday, US time, Wednesday, New Zealand time, and Australian time, and how might this sway markets and sway market dynamics. So if we think about the election, there's a lot of complexity in the US political structure and the style and the state-by-state electoral process. And there would be a fool's errand really to try and guess who the president might be. And the opinion polls are really still split 50-50, and we'll dwell on that a little bit towards the end. But we can draw on decades of data to see how markets might respond to either candidate's ascension to the US presidential office. Based on past events and the response of the markets to a new Democratic or Republican president, here's what we know and what has happened in the past. So one of the dynamics is that what sort of economy have we got in the moment in the US? And one is that we have increasing employment, we have reducing inflation, the first interest rate cut for some time of 50 basis points in September, and how might that lead to further cuts later on? And if one of them becomes president, how is monetary policy likely to go? So we also look at how the S&P has performed and in response to the markets in terms of a new presidency. So some of the questions we might want to ask ourselves is, how has declining inflation affected the election? And how has a Democrat or Republican in the past, how does a win to either president affect the S&P 500, which is the bellwether of the US share market? So if we think of this first part, inflation, it peaked at 9.1% in June 2022, but as of August or so, it's dipped as low, or 3-year low of 2.5%. So why is inflation so important? Well, when we ask electors, the people actually casting their vote, what is the primary concern they have? And invariably it's the economy and inflation. And it's easily the highest problem area that people look at. So how would a declining inflation affect it, and how does it affect the current Democrat-led regime? And does it help that regime going into the election? So the graphic shows headline inflation in red, core inflation in blue, and you can see that inflation has come off quite quickly in 2003, 2004 so far, and it's continuing to decline, and therefore, hopefully over time, interest rates will move back down as well, because we've had a very tight monetary policy until recently. So inflation is generally the top concern, as we've said, because it makes everyone's day-to-day expenses, such as petrol, gas, as they call it in the States, utilities, groceries, much more expensive. So any increase in prices, or significant increase in prices, means that consumers get less money in their pocket and they get less bang for their buck, if you like. So decreasing inflation, as we have at the moment, is deemed beneficial to the consumer, and therefore consumers feel better off. So the other measure that we've got is, how does inflation move in regards to wages? So inflation is the lighter green line here, and you can see that it peaked, as we said, in June 2022, but it's come back off. Wage growth has continued. So these are increases in wages, increases in prices, and we now see a period from around May this year where wage growth has outshone inflation rate. So people are getting to a better stage, and people will feel a lot happier with the current differential between wages and inflation compared to what it was in 2022. So why is this so significant in this period? Well, we have a look back at presidencies from Jimmy Carter's time and before that, JFK, in Eisenhower, even before that, the inflation rate on average for the term of the presidency, in Biden's case, is the third highest it's ever been in the last 60 or 70 years or so. So in the Carter years, inflation was very high, interest rates were very high, and then the best time has been when inflation on average has been 1.1%, and under JFK, but also 1.4% more recently under Obama. The inflation rate of 1.9 under Trump's first presidency is also quite significant when we look at that figure, even though some of his policies are deemed to be pretty expansionary. The inflation rate still wasn't affected too much by that. So history shows that declining inflation really favours the incumbent in terms of the US presidential races, where inflation sits has a direct effect, as I said, on the cost of living for people. And on the face of it, this decline should be beneficial to voters. And so it should help a Democrat-led regime, given that interest rates and inflation have started to fall. In the present scenario, the incumbent is actually not seeking re-election. He's passed the baton on to Vice President Kamala Harris, who is seeking to obviously succeed Joe Biden as a president, and trying to block former President Donald Trump the Republican from winning a second term. As we said, inflation peaked at 9.1% and since that time has come off. So how does the S&P 500 respond to a particular party being the president? Well, if we look at all election years from 1928 and between 1928 and 2016, when a Republican was president, the S&P 500 annual return was 15.3%, which is significantly higher than the when a Democrat has been elected, where it's only been 7.6%. We must put in a proviso here that some of those times where Republicans were in power was during the Great Depression, the Second World War, the Asian crisis, the dot-com crisis, and also as a result, also during the GFC. So the figure of the Democrats is quite pushed to the downside because of those significant events. The average in all election years was 11.28%. So we think over the next little while, the chances of the S&P 500 continuing on, if we look at the average in all election years, it's been just over 11%, which is quite significant. This next slide shows exactly what's happened. Again, this is taken from an external source, Morningstar, and they've looked at what's happened the day after an election, what's happened to the S&P 500. On average, the day after it goes down, the median's negative 0.7, and the average 0.5 at the bottom there of that table. But you can see in the ones in red, there's been movements to the downside, particularly the day after an election. A lot of volatility before election, and people not necessarily always happy with whoever is voted in. After that period, the second column looks at what happens to the S&P 500 1 month after the election. And again, the average is a negative number, negative 0.4. And that's really pushed down hard by the negative 16% because of the GFC in 2008, 2009. 3 months later, again, the GFC has affected Obama's first presidency, and it has continued on for some time. The most significant upside after a year has been after the 1996 election, where the market was up 34.5%. On average, the market has been up 16.4%. So what can we draw on from these numbers? Really, the most significant thing is if you're a long-term investor, stay a long-term investor. Keep investing in a balanced portfolio or a balanced ETF, if you like, and over time, you'll be fine. There's going to be a lot of noise between now and that 1 year period. So in the next year, the markets will move up, markets will move down, and volatility will be quite elevated, and it is always elevated at the time of an election. And also August, September, October is traditionally the worst months of the year. So if you're looking at the VIX as a measure of volatility in the US market, then we think this will continue to be elevated for the next month or so, but then decline after that as everything starts to settle down again and people get familiar with the new president. So this slide is probably the most important one in terms of all the slides. Really is just saying, stay with what you've got unless you want to day trade and make money on the downside and upside on different stocks over the next few weeks. The next thing that when we look at election times and what happens in election years, one of the significant things that has happened in the US economy in September was this rate decrease of 0.5%. And it's not unprecedented. In the past, we have had rate cuts as well. And this figure really shows what has happened. So in 2020, in that election year, interest rates went down 1.5%. 2008, obviously the GFC, they went down 4%. But every year, there has been changes in interest rates in election years. The only one that there wasn't one was in 2012, prior to the 2012 election, because the stimulus was still being affected. Interest rates had already been cut, and there was no need for policy change in that election year 2012. So this year, so far, we've had one cut of 50 basis points. And what's likely to happen? Well, one of the most important things next week, apart from the election, is the Fed meets. And at the Fed meeting, they will discuss whether interest rates should decrease a bit further. Indicators from the dot plot in September and also the rhetoric from various Federal Reserve governors has been that they still will be looking at the numbers very closely, but the market, according to the Fed Watch tool, which is produced by the Chicago Mercantile Exchange, and this is a graphic from it, is basically showing that the current interest rate is in the range 4.75 to 5%, and the market is predicting that the rate will change this Thursday US time, Friday morning Australian time, 6 a.m. The result will be there, and it's 96.7% priced in that there will be an interest rate decrease of another 25 basis points at the November meeting. The rhetoric, as I said, is talked about 25 basis points in November and also 25 basis points in December. The market is a little bit less certain about this December rate cut. So if we do cut in next week, or if there is a cut next week, is there a chance of another cut again in December? And at the moment, the probability of a second cut is around 73%, and the probability of it staying the same is actually as the November rate, if the November rate has changed, of around 25, 26%. So this is significantly different to what was in the market, say, up to a month ago, where it was sort of a 90% to 100% chance of two 25-point cuts. Now we've got this 97% chance in November, and then a 73% chance in December of going for another 25. So the dot plot that the Federal Reserve put out in September showed that by the end of the year, interest rates would have been adjusted downwards by 100 basis points. We've seen 50 already. November should be another 25, so that's 75, and the other 25 should be December, but the market is still a little bit uncertain about that because of inflation figures and rising employment numbers, or more bullish employment that's in the market at the moment than has been there in the past. So, who's likely to win this race? Who's likely to be the next president? And it really, the preference polls really remain very close, and there is, and the nominees are really running neck and neck at the moment. In both the national polls, but also in the key battleground states, according to voter surveys. And so if we think of the college of electoral votes, 270 votes are required out of a total of 538, obviously just over half, to win the presidency. So it's all up to the electoral votes and all important battleground states, and who's going to win those, and the swing states particularly, as a predictor of what might happen shortly. The biggest issue that I've got and what the market has got really has been that everyone has been dwelling on, who's likely to win. And this graphic shows that when Kamala Harris, when Biden resigned, she had a small chance of winning, just down to at least to a low of about 10%. Since that time, she's gained favour from the voting population, and the light blue line shows the Harris chances of winning, and the Trump chance of winning is in the darker blue. As we can see right at the right-hand side of the graph, the implied odds for the winner from the various election pundits shows a very tight race. So, as I said at the start, it's anyone's guess who might be there. The main thing is, the person who is not elected needs to stand back and gracefully exit and concede on the day or the day after or so, rather than have a hanging election or anything like that. The market likes certainty, so if there's a certain winner, then the market will like that, and the market will go up accordingly. The other part about the whole US election thing, and that's what we sort of don't think about when we're sitting down here in the Southern Hemisphere. We just hear about Kamala Harris and Donald Trump and what they're doing. But there's actually 536 people who have to be elected in this coming round, and includes 100 members of the US Senate. At the moment, 47 of them are Democratic and 49 are Republicans. The 4 independents were Democrats and still on that side, so the Democrats have slight advantage in the Senate. In terms of the House, again, it's pretty clear cut at the moment. The House of Representatives or the Congress, all 435 members of Congress are re-voted in every 2 years. So, we hear about midterms and that sort of thing. So Congress can turn over all of its members every 2 years if it wanted to, but obviously many resit or sit to continue on as Congress persons. So 435 members of Congress have to be voted in as well. And the key here is whoever dominates Congress and also the Senate needs to have some sort of allegiance with the president, and the president needs allies on Capitol Hill, whether they be from the House or from the Senate. So it's important to remember that a lot of people just think about the presidential race and who may or may not win. The Senate and the House of Congress as well, members of Congress, is a very important part of this electoral race, and don't underestimate that result and how that affects government policy over the next 4 years. One slide that I found from US Bank Asset Management was this one here, where it shows at the top the scenario where the White House is Democratic and the Congress is also controlled by the Democrats, versus the White House with a Democrat and the House is Republican, or there's some sort of split. In terms of the 3 months average return, based on those results, where there's a Democratic president, it doesn't matter whether they have a controlling interest also in the House, in terms of having Democrats ruling the House, or also Republicans in the House, or a mixed vote. There was significant returns in that first 3 months, particularly if it's a split vote. So, the average return, 3 months return, is nearly 4%. In line number 3, where there's been a divided outcome in terms of the White House and also the Congress. The fourth to sixth one shows a Republican president, and could have been in a Democratic House, and the return in that year is a little bit lower than it would be if one party dominates in line number 5, where the Republicans dominate both the Congress and the White House. And there's been sort of thoughts or messages in the media over the last 24 hours that that may be a likely outcome, but I still think the presidential race is a 50-50 call still. So in terms of returns of the market, in terms of who is in the House versus who is in the White House compared to Congress, it's really can be a mixed result, and it does change the dynamic a little bit in terms of return on the S&P 500 for the first period after that. So what are these? What are the two presidential hopefuls? What are some of their policies, and what are some of the advantages of having Harris perhaps versus Donald Trump? Well, if we look at the monetary policy stability, the Democrats, typically interest rate policies are expected to remain very supportive of low rates and little interference in terms of the Fed reserve system and how that works. They will continue to maintain an easy money environment that could be favourable to equity markets over the short term. Another advantage of Kamala Harris being president is social welfare expansion, and increasing social welfare programs could provide more support to lower income households or individuals who rely on government assistance. A Democratic victory may bring greater financial stability to those people. The other main advantage in terms of Harris's regime is green energy support and strong advocacy for green energy under the Democrats is always positive to sectors focused on sustainable and renewable energy, such as solar, and stocks we're mentioning here are First Solar, electrical vehicles such as Tesla, and green energy funds like TAN. So there is some stocks we're mentioning here regarding that might have some advantage in terms of green energy support. And there's been some media commentary recently that if Trump wins, then you buy puts on First Solar, but First Solar actually went up quite significantly under Trump's first presidency, so that may or may not work. And I think there's more dynamics in the market than just who the president is. In counter to that, the Democrats, the pro-Harris regime, there are challenges as well, and those challenges will be really higher corporate tax rates, and the Democrat policies usually include higher corporate tax rates, which could pressure company earnings and have dampened the stock market performance, especially in high revenue sectors. And that translates into what we said earlier regarding the return of the S&P 500 under a Democratic president compared to a Republican president. The last part is higher income taxes for top earners, and so increased taxes on very high income households to take money away from the rich to pay to the poor, if you like. These sorts of programs might impact the disposable income of those earning over $300,000 annually. So let's now look at Trump and what his advantages and disadvantages might be, or his advantages and challenges might be in terms of what the effect of a Trump presidency might have. So obviously one of the main things that they look at is to reduce corporate taxes, and his Republican policies have historically focused on reducing corporate taxes, which generally benefit businesses' profitability and also has a positive impact on the stock price. So because your taxes are lower, profitability is higher, overall, and therefore that's good for financial markets. In terms of energy, the Republicans typically support traditional energy sources, and the Republicans do focus on oil, coal, and other traditional energy sources. And if they get into power, that could boost stocks in that sector, along with the defence industries that align with more traditional energy and industrial strategies. In terms of the challenges under a Trump regime, was definitely interest rate policy uncertainty. And, when asked, he thinks that he should have some say in what the Federal Reserve does. It's like, the government of Australia, government of New Zealand having a say on what happens at the Reserve Bank of Australia or Reserve Bank of New Zealand, rather than having an independent body, the Federal Reserve in this case in the US, or the Reserve Bank of Australia. The interest rate policy uncertainty around the Trump administration, where he thinks he should have a say in whether interest rates should go up or down or not, may look at or change what happens for interest rate policies in future. And what that may lead to is replace the Federal Reserve leadership, and that could happen, although that Trump has said he wouldn't change the chair straight up. Doesn't mean he won't change it over time. It definitely could lead to greater fluctuation in a low rate environment, and we're hopefully moving back towards the lower rate environment as inflation still is a little bit sticky, but continuing to fall. One of the biggest policies that Trump has come out with is that he would place tariffs of 20% on all imports from countries other than China, and a 50% tariff on any goods that come from China. So this potential for an increase in tariffs on China could create headwinds in global markets, as the relationship between the US and China remains central to a lot of US corporate earnings, and particularly where Chinese goods are sold within the US market. If there's a hefty tariff of up to 50% has been mooted, then that will definitely change the dynamic of the market in terms of what might happen. There's also impact on the national debt. If they do lower taxes, how are they going to pay for that? The only way to do it is if they borrow more. So the national deficit goes up, and this could necessitate adjustments to government spending or other tax policies to help pay for lower corporate tax rates. So you've got a one hand versus the other type situation in terms of taxation. The Democrats may put taxes up, corporate taxes. The Republicans tend to put them down if they can. So it's a significant difference between one and the other. In terms of inflation, we mentioned a little bit about inflation a minute ago. Moody's have just come out with an estimate that under a Republican election sweep in Congress and the White House, it could increase in annual inflation to a rate of 3.5% in 2015, and a slight acceleration from the current, 2.5%. But it is significant compared to what we are looking at. So, under a Republican regime, Moody's are saying be wary because inflation may rise again under Republican presidency. Whereas if Harris wins and there's a divided Congress, the House is unlikely to return to Democratic control. Moody's estimates are that inflation would be lower in summer 2025, i.e. middle of next year, to be as low as 2%. So the effect on inflation on either presidency, one is that inflation may go up, and the other one may continue to go down. So some of the questions that we get asked in terms of Tiger Brokers and some of the information we've tried to put out in terms of the different presidencies is what individual stocks might be affected or might have changes. And we have our own community, as you know, called To the Moon. There's a post by Millionaire Tiger recently, and I draw on that information here over the next couple of slides. So in terms of a Trump presidency, what are the policy tendencies likely to be one versus the other and their impact on various industries? Well, the point to note is that Trump's policy tendency tends to be to support energy, as we've already said. It's likely to benefit oil companies like natural gas companies, fossil fuel companies like the Exxon Mobils, the Chevrons, Western Midstream, Peabody, and Baker Hughes, as shown in that graphic. So, as I say, this is available on To the Moon under Millionaire Tiger's postings. In terms of manufacturers, Nucor, Fluor, Carpenter Technology may benefit because the imposition of tariffs on foreign goods that we talked about, the 20% for any other country but China, 50% for China, will definitely help domestic manufacturers. And there's definitely economic commentators saying that if Trump gets in, smaller cap stocks that will benefit from this protectionism will definitely be better off and be able to produce on a more even basis than other external forces coming in terms of exports or imports into the US. In terms of the technology sector, Trump definitely criticizes the large tech companies, but obviously supporting tax cuts. So this will affect Applied Material, Texas Instruments, MicroStrategy, Planeteur, and various others. And that he's trying to help innovation investment areas, but also trying to reduce the dominance of the very large tech companies. Healthcare, he's looking at reducing drug prices, etc., and consumers, but put pressure on the pharmaceutical company profits. So he thinks that the pharmaceutical companies are gouging in terms of profitability, and definitely, when you look at some medicines, they are extremely high priced for, cancer treatments and various treatments that people would love to have and be able to use. So any Trump administration may help the likes of healthcare or Merck or Eli Lilly, which reported today. In terms of agriculture and automotive industries, in terms of agriculture, you've got obviously supplies of tractors and large trucks and that sort of thing, so that the likes of Deere, Tractor Supply, and various others may benefit. And when we look at the issue with the Australian economy is a lot of the Australian imports from the US, and the Australian imports from the US are over $40 billion. The exports to America are only about 12 billion. So there's definitely an imbalance where there's much more imported into Australia from the US than is exported to the US. So that trade imbalance, would it be even worse off if there's more unfair tariffs? And it will help. It will help the domestic car manufacturer in the US, the Teslas, the Fords, the GMs, etc. But it could add to the price of a new helicopter used on the farm in northern Queensland, or a private jet or jets that are bought by Qantas or whoever. Given that if there is tariffs put on imports, how will the Australian government reciprocate? Will they put higher tariffs on US goods coming into Australia? So therefore, a lot of that big ticket items, the big graders and stuff used in the mining industry, planes, helicopters, cars, etc., could be more expensive in the Australian domestic economy. In terms of real estate, they're looking at relaxing regulation and tax cuts in the real estate industry, and the biggest beneficiaries are the major listed equity companies in terms of construction, and there's two of them in the S&P 500, Danaher and Lanier, and that they would benefit from a relaxation of taxes and regulations in terms of the real estate and construction industry. Lastly, in terms of tax cuts, reduced government spending, perhaps, it'll definitely help businesses and wealthy individuals, and it'll definitely help a whole raft of companies, including the major banks, the cities, the JP Morgans, the Morgan Stanleys, etc. So there's definitely benefit for those companies from a Trump administration. So how does that contrast to Kamala Harris, and what are her policy tendencies, if you like, and how might that impact on various industries? And obviously we mentioned before, solar wind might be supported, the development of greater clean and renewable energy. So the first solars, etc., may benefit from that. Also from the manufacturing and supply of goods, if there's cheaper imports from overseas, it'll definitely help the likes of Target and Walmart and some of these major retail chains. In terms of the technology sector, definitely Harris is saying that she supports the development of technology industries, especially AI and semiconductors. And so if you think of the NVIDIAs and some of the other major AI users, such as Google, Amazon and Microsoft and reported today, along with Meta, not quite as good as it could be, both down about 3.5%, whereas Google yesterday reported its quarterly results and had a significant upswing in price. Obviously, one of the biggest areas that the Kamala Harris regime will look at is the healthcare industry, and they propose to reduce healthcare costs and set price caps on various drugs. This can help healthcare providers, the United Healthcares, but also it may affect the pricing of drugs and therefore profitability and supposed gouging that may happen in the biotech markets. Domestic consumption and fair trade are also part of their focus in terms of the green type thing, fair trade, buying goods that are produced in a fair trade way. It'll definitely could stabilise companies like Trimble in terms of the agricultural market sector. They also, in terms of the development of clean energy, in terms of electric vehicles, EVs, clean energy cars, etc., they would definitely benefit the likes of these new energy vehicle companies. And even though Tesla is CEO Elon Musk is out there backing Trump, there may be benefit from a House-led presidency as well, which he's not looking at. But in terms of electrical vehicles, the other ones, Rivian, Lucid, etc., may help. Real estate, the same companies benefit. Subsidies on housing and increasing the housing supply definitely helps our friends Danaher, Lanier, and various others like Louisiana Pacific LPX. In terms of fiscal policy, public services, infrastructure, construction, increasing in housing, healthcare, education, raising corporate taxes, etc., may help various infrastructure companies and electrical charging companies like ChargePoint. So these are the companies that our friends on To the Moon have stated. Our friend Millionaire Tiger has done some analysis on what is the policy, what is the tendency, and which companies may benefit from movement in price. One of the last comments I wanted to really make was that it was quite well summed up by a Reddit contributor. The only thing the new president really affects stock-wise is who they give the handouts to. Who gets the handouts? Who does they president give handouts to? And if it's a Republican, the handouts are going to the military contractors and energy. And if it's a Democrat, handouts are going to healthcare, green tech, so invest accordingly. So that may be the message from here. And definitely what I read it, contributor has said. Obviously a lot of individual investors follow Reddit, and interesting comment, that one, really don't care which president gets in. It's really following where the handouts are going to. So Jack, back to you. I'm finished with my slides, and I'll just try and get out of stop sharing the slideshow because you just got a black screen.
Absolutely. Thank you, Greg. Thanks for your time. And then also, we got quite a few questions as well. First of all, we talk about different scenarios when different parties get voted, right? So and also we talk about the historical market performance could be if under different situation. So at the moment, obviously Trump is ahead of Harris at the moment, and very interesting. And then what do you think the market could react if Trump get elected, as it become and then obviously better a few years ago, he's now a bit more predictable, and then therefore the market could preempt his future action could be, and what do you think the market could possibly happen if Trump get elected, according to the latest status poll?
Okay, so as I said, in terms of the history, if we look at the history part, and in terms of even Trump, inflation went down under Trump, even though he was expansionary and gave corporate tax benefits and the like. So it depends really on his policies in terms of the Federal Reserve. Is he going to be more in their face compared to Kamala Harris? I.e., is he going to try and change the Federal Reserve's mandate? In which case, interest rate variability and decreasing interest rates may affect the economy quite quickly. So that's one part. And also his corporate tax things and expansionary policies, may increase inflation. So there's definitely advantages for Trump in terms of some of the industries, but for other industries, there's obviously disadvantages. But it doesn't mean that the market forces don't just carry on. Everyone said, under a Trump administration, clean energy is going to go down, whereas under his first presidency from 16 to 2020, First Solar and all these stocks went up a lot and a lot faster than other energy stocks as people moved to electric cars and the like, although there's probably a little bit come off in that. But in terms of how that might affect exports, imports, etc., definitely the tariff thing is going to greatly affect the Chinese market, greatly affect the Australian market, particularly if Australia retaliates and puts up the tariffs as well. So the mining industry, the transport industry, and those industries might be grossly affected by higher prices for trucks, planes, graders, tractors, etc., etc. And then in terms of energy, he's definitely after more traditional energy means, and in some ways the market has moved a little bit back that way anyway. Everyone's saying, well, I bought my Tesla, but it's only good for 10 years, and to replace the battery is going to be 3 times the price of what the car originally cost. So why am I continuing to buy electric cars? Whereas in China, places like that, the Chinese manufacturers are doing so well in the electric car space. Tesla is one of the competitors there, obviously, and may benefit. But the electric car businesses in China are doing better in China than they are in other parts of the world, as there's benefit from owning an electric car rather than others. So in terms of transportation, big ticket items and the like, it might be more expensive for Australian and Chinese consumers, but also domestically in the US, Smaller companies will be better off from corporate tax benefits. The inflation rate may go up as these more expansionary, and interest rates may stabilise rather than go down as predicted over the next while. So if we looked at the interest rate curve for next year, some time ago, there was definitely a move that interest rates will go from that 5% down to 2.5%. Now the Chicago Mercantile Exchange's Fed funds tool is definitely showing a shift to a rate, terminal rate of 3 to 3.5%. So not as significantly lower as inflation may rear its head again under a Trump administration.
I think that pretty well covered the next questions, which is what do you think the U.S. monetary policy could be post-elections?
Yeah.
And also,
2 days after, we've got the Federal Reserve, and the result is actually on a Friday Australian time rather than a Thursday as normal. Obviously, they're allowing an extra couple of days because of the election, but the 97% chance of rates will go down again this week. It's significant because this is the first time rate movements and the presidential election is in the same week. And so hopefully they're not tempted to keep rates the same because one particular party got in one party. But if there's uncertainty, they may not reduce rates at the last minute. But I can't see that necessarily happening at this late stage.
I see. What do you think about the soft landing progress, post-elections? And also, obviously at the moment, by the look of it, we are heading to the soft landing at the moment in the US. And what do you think of the further chance of hard landing in the economy and in the US there?
Well, there's quite significant numbers came out earlier this week, and one of them was the GDP number was significantly lower than people predicted. So the growth, GDP growth was not as significant. So that's a signal of more harder landing. And the job numbers in terms of job creation numbers were softer as well. So, there may be need for interest rates to move more quickly because of these numbers. But there's been a lot of noise between the September meeting and this current meeting in terms of the inflation rate, job numbers, what the various governors are saying. So I think, I still think this week they'll drop rates. I still think they'll drop them in December. But the forward curve into next year, maybe only 1/4 of a percent in the March quarter, and then 1/4% in the in June quarter next year, depending on the presidency.
I see. I think because our clients they're all Australian domiciled, and then I'll probably ask another question on their behalf. Just to wrap it up, in terms of the market impact, what do you think the post-elections, of course, depends on whoever getting elected, what could be the overall impact, on the actual Australian market, for, what's the impact for all of us, basically?
Yeah, sure. Okay. So in terms of currency and resource demand, if a Democrat wins, the US dollar will weaken against the Australian dollar. So the Australian dollar will earn more in terms of US goods. So there's definitely demand, or be lesser demand for the US dollar if a Democrat wins compared to, say, a Trump win. And then in terms of resources, Australian resources, obviously, that's the most significant part of Australian exports and the Australian economy is the resource part. They would benefit from an uptick in global commodity demand, especially if the US and Chinese economies are stimulated. And we're seeing this Chinese stimulus come out a few weeks ago, and also if there's more stimulus from a Trump administration, or even from a Democrat administration, from a Harris administration, whereby they're trying to create more jobs and also give better benefits to people, but at the same time looking at resource-heavy commodities like lithium, rare earth, and all those sorts of things. then those sorts of markets may benefit from either administration, really. In terms of the US and China both supporting green energy, obviously, as I said, the mining sectors will benefit from that, and could drive mining stocks higher as the major resource supplier to both economies.
Yeah, and then also I want to comment to our general audience that with Tiger Brokers that we are strong believers in the technology changing the world, and therefore that's where the value is adding, and therefore it reflected on the share price, and whoever invested into the technology would get benefit from it. Which for example, like for new investors who don't know where to start, we always recommend it to start from the Magnificent Seven stocks in the US. So, and also generally speaking, most of the largest pension fund in the world would have allocation into those stocks anyway. So that is something that the wisdom we borrow from the smart money, basically. And also for Australian wide, we always believe in the banking sectors in Australia as well. The big four banks is the good starting points, and also the resource giants like BHP, Rio Tinto's. Those are and also FMG as well. Like those are the world leader in Australia in the mining sector. So recently I spoke to a lot of investors that some of them they start with, well, including myself as well, like 18 years ago, when I first started, I started investing into some, tiny mining stocks, which we eventually didn't turn quite well. And then the whole thing changed after I switched from, small micro cap to the large cap stock. And then when I say large cap stock, that means like, the leading companies in that particular niche, in that particular sector, and also invested by the main, the biggest pension fund in the world as well. I think.
I think that if clients don't know what to invest in, turn to ETFs, exchange traded funds. Your major exchange traded funds in the US on the S&P 500 is the SPY or the VOO, or the Nasdaq one is the QQQ. So you're not sure which sector to invest in. Look to the ETFs, and we did a presentation a few weeks ago looking at China, and there's lots of domestic ETFs based in Australia listed on ASX and tradable on Tiger Brokers, whereby people can get exposure to China. We had Van Eek on, and their CNEW, C China New, if you like, and China ETF, CETF were both mentioned by our presenter, and again, it allows exposure for first-time investors to get into significant markets like China or the US in a cheap way, rather than buying all 500 stocks in the S&P 500, just buying a diversified portfolio with an ETF. So investors should look at those as opportunities.
Perfect. And also we conscious at a time as well, and I think let's just wrap up for the day, Greg. And just before we finish, is there anything that you wish to add before we're finishing there?
Well, there's been everyone's concentrating. I tried to, I suppose, point out in my presentation that a lot of people concentrating on the presidency rather than the other 400 and something people that are being elected as well. So, the US democratic system is around the presidency, the Senate and the Congress, and also, the Supreme Court. But, those other two parts in the middle, Congress and Senate, are being voted in as well. And that will have a significant effect on, whether Trump or whether Kamala Harris can actually get any of her policies through, because they could be vetoed by the Congress or vetoed by the Senate, and vice versa. Their policies might be vetoed by the new president. So they have to work together. They have to align with each other. And the last thing we want is not a clear winner. we need to have a clear winner, and the other person, nicely concedes and goes away. Our problem in 2020 was Trump still thought he won, and you had this 3 or 4 months of economic and political uncertainty in the US, as well as people protesting on Capitol Hill, etc. as well. That's the last thing the US needs.
Absolutely. Okay, so thank you, Greg, and thanks for everyone's time. And then if you want to know more about the market, want to get into investing, please feel free to subscribe to us. And then also register our Tiger Trade app in Google or in the App Store. You can go to search for Tiger Brokers or Tiger Trade, and then you can download and then register and keep up to date with the latest trend on the market, and then also for the next upcoming webinar as well. And thank you, everyone. Thanks for everyone's time. Thank you.
Thank you,
Greg. Thank you.